Today, I have a former IRS auditor with me, and Gabe is not your average tax guy. So this is going to be a really great, unique conversation. We are going to get a little bit nerdy talking about some tax theory and tax strategy, but stick with us because we are going to get to some of the best tax reduction strategies for not only business, like small business owners, but also for those W-2 or highly paid employees. Think attorneys, doctors, engineers, and similar positions. So we are going to get to some of the best tax strategies. And if this is the kind of content that you find helpful, there's two things I need you to do. One, hit that subscribe button. And then two, I need you to check out the Passive Investor event. That is where I met Gabe a couple years ago. That is where you could meet both of us in person again. And this is where you can meet additional people, and get additional resources that can help you in your wealth building journey. So with that, let's jump into the interview. Okay. Hey, Gabe, thank you for being here. This will be a good one because so far we've mostly interviewed people who they had an incentive to educate someone with a certain slant, right? They had an offering, they were doing and I have some other coming soon, like marinas, apartments, all this stuff. But today we have a tax guy and not just a CPA. I actually learned something new when I started working with Gabe, was that an attorney can do your taxes. So Gabe is actually a tax attorney and he is not a CPA, which I think is super unique. So Gabe, thanks for being here. Why don't you introduce yourself and just kind of give us a little bit of your background?
Absolutely, Jared. Well, thank you very much. I love the podcast and what you're doing. I'm looking forward to seeing the future here. So great opportunity. For me, yeah, I kind of came the scenic route into public accounting. It was during the recession. I went to school, set and loved accounting somehow for some reason. But
Yeah. Yep.
after undergrad in accounting, I've always wanted to go to law school, and the economy was still kind of flailing a little bit. So went to law school and knew I was going to focus in tax. Tax law was always something that was really just interesting to me. It was like a big puzzle, and it was one of the hardest things in law. Everybody told me, like, you're insane. That's so difficult. And I think I've always just loved a challenge. So studied tax law at law school. And then much like kind of medicine, you specialize after you go to medical school. Law
Okay.
is similar to that. So after law school, I went and got a master's of tax law to specialize in tax law. And then from there into public accounting. So I went straight into the public accounting arena, working with CPAs, and I stayed in my tax lane. But yeah,
Yep.
did that for a while and never took the CPA boards because I have a Texas law license. And under a law license, you have all the same rights and duties as a CPA in the tax world. So there's something called Circular 230, which in the IRS is basically the professional standards. I can represent people in all 50 states.
Mm.
And then also I'm waived in to represent people as an authorized representative for all these states' taxing authorities.
Okay.
So,
All right. Yes. And so that was the thing that was new to me. I thought you
yeah.
had gotten your law degree and then went and got a CPA as well. Uh, and you're right. Tax is weird. The CPA arena is odd. I jokingly say that
Yeah.
like I mean, I offend some people, but CPAs tend to be a different category, right? A little bit
I'll,
different than the average person.
I'll offend most CPAs, and I'll say there's carve outs and caveats because there are outliers, but most CPAs are nerds. They're rule followers, and it makes sense because the
Yep.
industry is very much, here's a rule, let's follow it. Here's a speed limit, let's go it. Let's not get the speeding ticket. Let's know the rules and follow
Yep.
them. And it takes that type of personality to get into the field. So there is, and that's where I've always been kind of a square peg in a round hole in the industry, and I think that's the law side of me gets into
Hmm.
it. But most accountants and CPAs are historians. They take the data and what's happened and then put together the puzzle of the tax return or your situation
Yep.
in the rears. There is a trend going on in the industry now with more tax advising and consulting to kind
Hmm.
of get ahead of it. And we are seeing some really great CPAs and people that are in front being tax advocates.
Yep.
And then for lawyers, tax attorneys typically try to be in front of the ball. We try to be forward thinking about what could happen, where's the risk, the liability, how can we position. drafting different things to get a certain outcome. So that's the difference in sometimes the professional service that you'll get in this space is, you want to know who you're getting. Are we getting a historian, or are we getting somebody that's forward
Yeah.
thinking? And I think there's a happy medium there. You want somebody that's can do a little bit of both.
Yep. No, I like kind of what you're saying, and I even had a maybe an adjacent thought is that a lot of times maybe the person that's gravitates toward that CPA specific role is kind of that rule follower. Like, what are we
Yeah.
supposed to do? What does it say? This is how we do it. Versus the person who is bent towards the attorney role, and I could be having maybe I'm just being influenced by shows like Suits and stuff, but it's more like, hey, what can I do with the rules I've been given?
Exactly.
If that
Yeah.
makes sense. And that might, and not everyone's like that, right? And then to be fair, like my dad is a CPA, but my
Yeah.
dad's a weird CPA. So if you like,
Yeah.
so it's like super outgoing, super gregarious, and so there's all sorts of different flavors, but you do
Yeah.
kind of get your stereotypes, and they're there for a reason.
You do. And we're going to get into this in a little bit too, but it's funny because the rule followers, and this is, I can't wait to talk about this and we'll dive into this more. Because you have people that are rule followers, the IRS knows this and they add fear into the equation. And that's how the IRS rules, is by fear. So you have somebody that already wants to rule or like follow the rules, you add fear to
Yep.
it, and the IRS is now creating a voluntary police force. So people that are actually in the profession of tax preparation, consulting, and advising, they have this fear instilled in
Mm,
them by the IRS. So they're now telling their clients like, "Ooh, hey, this is a speed limit," instead of what should be happening. What I always use the analogy of like driving on the highway. You're in the North Dallas area, or not North Dallas. I'm sorry, the Dallas Fort Worth area, Fort Worth
DFW.
leaning,
Yeah. I'm
DFW.
on the
Yep,
best side. I'm the west side of
you.
the Metroplex.
I was about to say the good side. I love
Yeah.
the Weatherford Aledo area. That's hey, but anybody that goes and visits my website or brand will see I'm a cowboy at heart. But anyways, yeah, we go on. Let's say we're driving on I-20 or 635 or any of these highways in that area, and the speed limit's 55. Without bumper to bumper traffic, who's doing 55? No one.
In
And
DFW,
you're going to
nobody.
get run over. You're going to get
Yeah.
run over, and that's the thing. So it's tax law is the same thing. Tax law is the speed limit. We have to understand that like there's the difference between the Wesley Snipes going to jail, drunk driving in a school zone, or the hey, you're doing 10 miles an hour over the speed limit. If you get audited or if you get pulled over by the police officer speeding, you're going to get a speeding ticket. It's going to be points on your license. You're going to have to pay. You may have to go to defensive driving class, or we may have some penalties and interest.
Yep.
But let's also put into scope what's happening and our decisions. And that's what good tax advising is saying is there a nexus here? Is this something that's way over the line, or is this something that's aggressive, but we're not manipulating the facts to get it too egregious?
Yeah, correct. You're still doing real, true things,
Correct.
um, and just operating inside the large boundaries. And that's someone told me, and it was probably Keith, that it could have been somebody else, but like the tax code is not as big as it is, because that's all the things you have to pay. It's as big as it is because that's all the ways you cannot pay, right? But and I know it's kind of
Essentially,
like
that's a good way of putting it.
it's this it's giving you an enormous amount of rules, and inside all those rules are also ways that those rules don't apply, or that you can do
Mhm.
something else other than let me just take my earned income and pay my taxes, right?
Absolutely. Well, and that's
So
the tax code, the tax theory. America has the most convoluted, worst tax code in the entire world, in the entire history of the world, over 6 million words. Every time Congress meets, they screw it up even more. Both sides. This is not a political conversation. This is both sides of the aisle. Because what happens in America that doesn't happen necessarily in other countries is we try to regulate action and inaction through the tax code instead of just through laws. So instead of saying, hey, we want somebody to do something, here's a law, do it or don't do it, we say, hey, we're going to incentivize or disincentivize this by tying it to taxes and monetary. It's one way of doing it, but the problem is that you overcomplicate the system now. And just like you said, it's incentives for not doing or doing something or being able to keep more of your money. But in tax
yeah,
theory, we distill it down to the very basics is if you have economic gain, you somehow increase your bubble, you owe taxes or the government for that. But then we get into the tax code and it says, well, here's exceptions on exceptions on exceptions, or
Yeah.
there may be your bubble didn't necessarily grow, but you may owe taxes. And that's where it can be very difficult to navigate those waters sometimes.
Yeah. Okay, so you mentioned public accounting, and I know
Yes.
specifically that we're gonna talk about the IRS, but
Ah.
how do those 2 things overlap in your background?
Oh, yes, and I didn't touch on that yet, but
You
so
didn't.
after oh, well, so, the nerd in me is gonna come out. So after some time in public accounting and after 3 degrees, I was recruited by the IRS, and they dangled, student loan forgiveness in front of me and a potential run up the ladder for some promotion. So I
All
went
the good stuff that our tax dollars go to pay for.
absolutely, and, being a savvy tax person myself, it's like, I did the math and I was like, "You know what? I could, this could benefit me and my family." So I bit the carrot and went into the IRS, as a federal revenue agent, a field agent. I was always on the civil side, but I spent 4 years as a revenue agent.
Okay.
So I always say I was a stormtrooper on the Death Star, but I was not
You
I was
said
not
it,
a
not me. Yeah.
yeah, absolutely. I was not a good
Stormtrooper
stormtrooper.
on the Death Star, that's
I,
great.
uh I I was really good at closing cases. I was able to shortcut a lot of things, see high level, and that was kind of my background with licenses and education and experience. But bureaucracy does not like shortcuts. Bureaucracy does not like efficiency. I am a entrepreneur, businessman, and lawyer at heart, so I'm always thinking outside the box, and it was a tough fit. During my time there, I got to deal with I had some great people around me, but the system was very difficult. I did train a bunch of agents and I did a lot of different details, so I was very lucky to kind of have some insight. But after 4 years, I decided it wasn't for me and I needed to reform and detox. And so I left the Death Star to come work for the good guys, and back into the public accounting arena. And just it's been off to the races since then. Finding just wonderful client base, working with some amazing professionals, coaching, training staff, managing people,
Yep.
and it's been wonderful. I've really enjoyed being on the outside, but having that insight to the IRS and Jared, it's insane. Like, okay, so just to break it down to give you some stories here. So when I started, it was pre-COVID.
Yep.
It was during the Trump's first administration. The IRS is still MS-DOS based system. So
Mm.
I used to log in to get to taxpayer records and to do things that I needed to do. It was the black screen with the green font, and I had to do CD backslash. I sometimes was always thinking like, hey, the Oregon Trail may pop up on this computer. Um,
You could play tanks on that.
Oh,
Yeah.
absolutely. Yeah, it was wild. So that's and then I had to anything I wanted to do, I had to fax. So I had to fax around from department to department to
Yeah.
outside representatives, inside, and I'm not kidding you, even like at our local office, our fax machine sometimes would just drop stuff on the floor or slide under desk. I heard this all throughout the service in the country. So people always ask about like the inefficiencies, and of course with Elon Musk and Doge, we hear about like the mine underground that's processing pensions, and I'm like, yeah, no, that doesn't surprise me. That
Mm.
sounds accurate. Uh, During COVID, stay at home, we finally got authorization to start emailing external stakeholders, so taxpayers,
Okay.
representatives. But it took a pandemic for us to just email. This is 2020. Email's been around for 30 years, almost 30 years. Like, what's the
That's
hiccup? So
nuts.
it is. So that's how bad it is, and just the systems and processes. You think about it. We joke about the nerds in the CPA and the accounting world. Now take that top echelon of nerdiness, and those are the people that go to the IRS and work in government because they want that stability and security,
Okay.
and they add layer on layer on layer of bureaucracy, and then change is terrifying. Even good change is terrifying because most people would rather stay these the type of mentality inside the IRS is, "It works, let's not change it." And so that's where we saw recently in the news, the Doge, and everything else going in saying, we're basically taking this bureaucracy machine that's an overgrown hedge, cutting it off, and we'll rebuild it, but it's going to be really ugly. And that
Yep.
was the modality of what happened in there. And still have a lot of friends on the inside. And I talked to one of them
Yep.
yesterday. Her name will go unmentioned.
Yep. No, that's good because we want to
she's
hear some of this stuff.
Oh yeah, she's in high net wealth. She's an auditor in high net wealth, and so, but the reduction in force, the everything that's happened has taken a bad situation and made it worse. She says it's like a death march right now. Like the return to
Mm.
office, the everything else, morale is at an all-time low inside the IRS.
Yep. Yep.
So,
Well, and that's kind of what I wanted. I know that you've been out for a little while, but
mhm,
for layman's terms, you said that you were a revenue agent. Does that mean you were an auditor?
essentially,
Essentially?
yes. Yeah.
Essentially, okay. Yeah, I like to dumb it down for people like me, what were we actually doing? So, for lack of a better term, you were auditing, you were clearing files because maybe you looked at it a little bit differently than other agents. Did you ever get in
Yeah.
trouble because you were clearing things too quickly or not being maybe as of a stickler as maybe some of the other guys?
Absolutely. That was one of the things is I would kind of I'd go to my manager and he would come back and be like, "Hey, this file wasn't done right." And I'm like, "It's closed. Economically, it's we're at this is needs to be closed and moved along." And he was like, "Well, you need to do this." And I'm like, and I would sit down with him like, "Look, here's the situation is this person owes $20,000 in tax. We have them here. I can spend 1 hour and prove that they owe $20,000 in tax, or I can do what you say to do, and I'm spending 40 hours to get to the exact same result. We need to close this so I can go and close more cases." And they're already agreeing and saying, let's move this along. You're going to tie this case up, me up, and them up for longer than if we were just to say, let's end route it. But that's what was typically happening, or what my
So it's the teacher
experience
that wants
was.
to see long division.
Correct. Show your work. Yeah. And I mean, there is a time and a place for that. I get it. And what they always said is like, hey, mistakes will make, you're going to miss something. There's a process for a reason, yada, yada, yada. But the problem is when you have a system, especially in a government, that your processes have grown to the extent of killing efficiency.
Yep.
That's where I had the problem with it,
Yep.
is they were pushing me to say, "Hey, close files. Your annual review and your rating is going to be based on how good you are at your job." And I'm like, "Okay, cool. If you're going to tie my success to closing files, then I'm going to find the best way to close files."
Yep.
And then they would slam the brakes on that. And I'm like, "You're handcuffing me. I can't achieve what I want to do by doing it this way." And it's an institution.
Yep.
It's not, and that's where on the outside, people like yourself and entrepreneurs and investors and business people, we have a mind that has made America what it is. And that's what's sad to see, is that we have a government system now that is
Stifling that.
counterintuitive to that.
Yeah. Okay. So what I want to touch on what currently, like, what do you see, and maybe give a little bit of the backstory, right? Because I know
Yeah.
it's in the news. I mean, the IRS under Biden, I mean, they hired a bajillion additional IRS agents, or they were supposed to be. Would that be a better way to say it?
They,
Um,
so,
Budgeted for it,
oh my gosh,
and then that's
yeah.
now not happening. So, like, what is that? And while I might feel for the individual that is employed there, that is walking through these death marches,
Yes.
um, I it's hard not to see it as a positive for the average. Really, actually, you get into like who actually gets audited and has to pay. Sometimes that's the lower end of the income spectrum, just because they did their taxes wrong.
Yeah.
But like, what does this mean for like the entrepreneurs, for the business owners, for the
Absolutely.
surgeons and the attorneys making $400,000, $500,000, $600,000 a year?
Yep.
I want to know what it means for these guys, for
Absolutely.
for me and you and our listeners.
Let me kind of pardon me, I
That's a
drone
big
on, and
question.
please, it is. And so I'm gonna get there a scenic route, because I think a little bit of background, and not only that, but I don't want to miss the opportunity to frustrate and upset everyone.
There you
So
go.
I
Yeah, a true
I'm gonna go
instigator.
ahead. Yes, exactly. So um the talking heads, this is where we all need to turn off the TV and stop playing party politics and saying our team is right.
Mhm.
Both teams are wrong. Both all news outlets are wrong. They get this wrong. They take a nugget and they blow it up and make it seem like something. So whenever we did have this influx of money into the IRS and they were saying, "Oh, they're buying ammo, they're hiring all these agents and everything else."
Mhm.
Okay, first, let me break this down from when I was on the inside when this was all starting to go in. We are faxing around. We're on antiquated systems. I'm getting just completely stressed out and burnt out because people are just expecting more and more and more, but I don't have the resources to do it. Audit rates right now are way below they've ever historically been because of understaffing. Attrition
Cool.
is horrible. Yes and no. Yes, it
Yeah.
sounds good, but yet again, let's think back to the COVID era when we
Yep.
saw crime rampant in the streets, the riots and all this other stuff, and everybody was like, "We need more police. There's not enough police presence."
Yeah.
Financial
That
world's the same thing.
yeah.
So I agree with you where it's like it feels good initially, but it's icing. It's sugar. It's not sustainable because we need to have the rules enforced, or yet again, it's going to break the system. And you're going to
Yeah.
see in
What
the
we don't
news.
want people to hear is there's no enforcement, I can do whatever I want. That's not what we want people to hear.
Oh, you mean like Hunter Biden and the Chrisleys? Let's take two people that just got pardoned on either side of the aisle right now that were both indicted for tax fraud, and both of them were given carte blanche
Yeah.
under different administrations, but both of them broke financial tax fraud rules. That's what we don't want to have happen.
Yep.
We want the rules to be enforced because we want to understand what our risk is. And when you blow that up because you don't have a good enforcement policy, then all of a sudden, we don't understand where that line is on risk. I don't understand. It's like, hey, am I going to go to jail for 10 miles an hour over the speed limit, or is that okay? And that's where it's like, we need to understand as a society where those tolerance levels are. And you only have that by having a good infrastructure that can regulate and monitor and everything else. So the influx that we had with the IRS, I saw it as a good thing because we needed to get those resources up, modernize everything, and establish a baseline of everybody understanding, hey, this is where how it's going to operate. It's not just this flailing thing because yet again, you go down to Mexico, you don't know if you can bribe the police and walk away, if you're going to get arrested and thrown in jail and not hear from somebody. It's terrifying unless you're like in your little encapsulated thing. And that's kind of
Yep.
how it is with the IRS right now. Not saying you can bribe agents. Don't try that. You
Yeah,
will
yeah,
go to
yeah.
jail.
But you have no idea where
It's
you might fall if on what you're doing.
when you get that letter. And that's what I wanted to see the IRS beefed up over. So we had that influx. The ammo stuff was an absolute BS thing. That was because there is a criminal division in the IRS, special agents that are tack on with the, Secret Service, CIA, FBI that go in and actually do criminal enforcement. They
Correct.
have to do
There are
training and fire.
agents
They
with the
are
IRS.
federal
Yeah.
police agents. So it's not like anybody was going to be, kicking down doors and jackboots and everything else. It wasn't that way. And a lot of the infrastructure that was building was to replace the attrition that we had had. We had had so many people retiring, people like me that just basically threw up their hands and walked out. So I wish that we had kept some of that funding because we need that infrastructure to help manage that. On the backside, what happened is now we have the reduction in force Doge, and that's just gutted that, and everybody's gone. And so we have this pendulum
Yeah.
and it's creating chaos. So, and then you do have a lot of bad actors, and that's where the one side is saying IRS bad, bad people in there, and they're not wrong because one of the top brass in Large Business International, which oversees high net wealth individuals, was just put on administrative leave, soon to be fired for making comments about targeting Republicans. So
Yep.
this was a month ago. Like these things are still happening. That is very bad. We do not want these
Yep.
people in charge of these things. We want people that are like, hey, let's just follow the rules, make it efficient, go forward. Um, but yeah, it's one of those that you have that. So right now, what we're seeing is we saw under the Biden administration staffing up. Training for an IRS agent takes 2 to 3 years to get them up to speed. Through that training, they're auditing files. But it's kind of low level. I trained a lot of people and went through training.
Yep. Junior stuff.
Junior stuff, low hanging fruit. So we're not seeing these full blown like experienced auditors that are going to go after like the nuanced rules of material participation with the short-term rental. Like they typically don't look at that type of stuff. They're not going into the details of a cost seg, or they're kind of hitting like, oh hey, you took too much travel expense. Your meals are personal, so we're going to not deduct those. So that's what was happening, but we had the reduction in force. All those people got let go. You're now the audit levels are going tanking even further. Cases are getting closed, and going forward for at least the next few years until we see an infrastructure buildup or either personnel or technology. I expect a lot of cases. I've been hearing rumors that they're not even reviewing refund cases over 70,000 or under $70,000. Yet
Yep.
again, I'm on the outside. This is rumor mill from my
Yeah. Yeah.
inside sources,
Secondhand.
but yeah, they're saying that basically right now, like there's just not enough staffing and not enough resources to where it's like, hey, unless you're requesting a refund bigger than this, we're just going to stamp it and move it along. Which is great. It's great for
Yeah.
the entrepreneur and everything else, but you still also have carve outs and different things like earned income credits are always going to be a hot button issue for the lower income taxpayers to get
Mhm.
audited and preparers to get reviewed. Then we have, the ERTCs. Those are special groups now, conservation easements,
When you
captive
say
ins.
ERTC, that's the employee retention tax credit. Is that what you're talking about?
Yes. Yeah.
All right. I
Yeah.
just like
So,
to make sure we explain whatever
sorry.
acronyms we use. Yeah.
Yep. Sorry, I get going on my jargon. I need to stop that because I always trash talk everybody that uses it. But we do have some specialty groups, so going after certain people. But right now, the IRS I'm hearing that the files are not getting handled that much. And I
Sure.
went through some audits recently, and the people that they're hiring are idiots. I
Mm.
just represented somebody. Get this, real story. So, a guy made a couple $1 million W-2, needing to offset that. So by the end of the year, decided to buy a smoothie shop. And operate it in December to get material participation, bonus depreciation, write off everything. And that way, then he could hand it over to a manager and have passive
Materially
income. And
participated in the first year, take bonus depreciation, and because he materially participated, it offset his earned income rather than being passive. Is
exactly.
that okay?
Yes. Yep. So it basically became an active trader business. Yet again, just nuances of some tax things because
Yep.
if there's a tax nerd, they're going to listen in on this podcast. They're going to try to check me on that. So I'm throwing those
Yeah.
details out for those
Ish.
few people. But,
Yep.
anyways, picked up for audit. And this auditor, instead of all the other technical things that were actually could be an issue, he was asking me, I kid you not, Jared, in this interview, he asked me, okay, so I'm looking at the depreciation schedule. Can you tell me what the kitchen equipment was used for? I literally, my jaw dropped, and I told him, I was like, you have 15 more minutes. We have 15 more minutes and we are done. I am not wasting my client's time or billing him for these type of questions. It is a smoothie shop. He makes
Kitchen
smoothies.
equipment was
Like, you have 15 minutes. Ask your big questions because I'm signing out, and you can take all the evidence I gave you and go write your report because I'm no longer
wow.
participating in this. And it was funny. He had his supervisor on. I think he got laid off to let go during because the file kind of went up in the air. But yeah, that's who we're dealing with. And so it's funny because you have these brilliant minds in accounting and tax that are coming up with these high end strategies, but most of the time, the people that are questioning them are idiots.
Yeah. So I mean, so is that a good thing or a bad thing, right? Like that could be good in the fact that it will be hard for them to like fight it, but bad that like hard for them to
Yep.
understand that you're doing something legal, right?
And that's where strategy, that's where you play chess, not checkers. And this is where having a good representative, let's say your dance card gets pulled, most people that have a CPA, the CPAs typically want to be the smartest guy in the room. They have their ego. I did this. I'm right. I want to defend it. And I understand that. But the problem is CPAs are afraid of their own shadow. They say too much and they hang themselves instead of understanding this guy's an idiot. Let him hang himself. So going into audits and everything else, I typically say, the attorney is always saying, shut your mouth, don't say anything, no matter what the
Yep.
case is, whether you're
Yep.
getting pulled over or anything. And so I do that. The auditor doesn't understand, writes up this stupid report saying that my client owes $1 million when I'm like, my client's freaking out. I tell them, don't worry about it. We go to the Office of Appeals. We take our
Yep.
findings to the Office of Appeals and we talk to them, hazards of litigation, and say, I'm taking this to tax court. You guys are idiots. They negotiate down or they stand their ground. We go to tax court and I win there. So depending on how much we have, the buck doesn't stop with the audit. There is the system. There are appeals.
Yeah.
There are everything else. So that's where chestnut checkers comes in.
Okay. Okay. So, yeah, what I think I want to ask about like some of the most unique audits maybe you did
Oh,
or that you've
please.
defended. Like, what's something like really interesting that you've seen? Maybe on the good, like this was super legit and it worked out well, or like maybe the most egregious effort to avoid taxes that you
Oh, I
caught.
got
Like
both.
this guy was an idiot. So I feel like there could be a good on either side.
Yeah, I have a fun one. This was early in my IRS career. I had a file drop on my desk. It was a training case, so we were looking at like Schedule A deductions because those are stupid easy to audit and review. So medical expenses. Oh, this guy ended up having like $100,000 of medical expenses, and sometimes it's legit. There's
Mhm.
cancer, life altering things, everything else, but we just trust but verify is always kind of the modality. So I went in and was like, hey, okay, hey, just give me your proof on this. And so the CPA came back and was pretty sheepish and was like, here you go. And I was like, okay. And they were like, sorry. And I was like, sorry for what? And they're like, you'll see. And so the guy had taken I think it was a $70,000 boat as a medical deduction. Medical,
Oh,
not
his
business,
emotional
not,
support boat.
he was overweight and the doctor told him to get outside more. And so he was like,
Him.
oh, well, you know what would help me get outside more is a boat to lose weight. So it wasn't like he had a condition. And that's where I'm like, this is just beyond silly. So that was one that it was just like, you see that. More egregious where it gets not as funny anecdotal, but I saw short-term lender, the guy that did the payday loans, he
Okay.
was taking investors'
Already
money.
typically well thought of.
You think auditors are bad. So he was taking investors' money to give out these payday loans with just, 1,000%
Yeah, crazy
interest rates,
stuff.
just insane, just taking advantage of the people that shouldn't be taken advantage of. He was claiming all these losses as his own, even though it wasn't his own money. Had a partnership where he was his own social twice down on the partnership return, making up numbers, just criminal, just absolutely criminal. Worked this case, tried to get it to go to criminal, tried to get him to be because yet again there was like this personal side of me that just he was taking advantage of poor people, people that literally are just trying to pay for their groceries or kids, not educated, like going after those people. So I already didn't like that. And then seeing what he was knowingly doing and then taking advantage of his investors, everything else, I was like, I'm going after this guy. I think I worked that case for like a year, 18 months, something like that.
Oh man.
Somebody from the top came in and just told me to close it. Yeah. Yeah. At that point, that's when I literally was like, I can't care anymore. I can't.
Yeah.
And it was so yeah, I have defended, and so it's been fun. So that was a sad one.
Yep.
But on the other side of helping some people out, I had a Instagram model up in kind of North Carolina area. Built up a brand in her business, and she was awesome lady. But she bought a plane and she traveled around on her plane, took
That's a high end
pilot.
Instagram model.
Oh,
Yeah.
yeah, yeah. Took, some, lessons, recorded some videos on it, and wanted to write off the plane, and I'm like and as much as I didn't want to, I'm like, "Let's do it," and this was before I started getting a little bit more kind of forward thinking, and I'm like,
Yep.
yeah, I was like, "Alright, let's carve out some personal use," but basically, it's like her
Similar to like a work vehicle.
a
Like
work vehicle, yeah. So,
yeah, okay.
we wouldn't take, we gotta account for the trip that we're driving down to Disney and say, "Well, hey, that wasn't work
Yeah.
related." But for her, I'm like, she's actually her whole brand and lifestyle and everything else is what's helping her generate income. So IRS agents hate that. But for me, I would argue every day in front of tax court and say, without these type of things, we aren't able to generate her type of following and culture
Yeah.
and persona. So she's actually trying to incorporate that into her
Brand.
world, her
Yep.
yeah, her brand, her business world. So there's this nexus here. So that's what becomes aggressive. And that's where we start thinking about, I always coach people and advise people, especially with paying your kids, is the other
Yeah, we'll
hot
talk
button.
about some strategies in a
Yeah.
minute. I do want to cover some of that.
Yeah. So that's one of the ones. Yeah, there's been a lot of just kind of interesting cases like that where you see people doing things. Right now, we're seeing a lot of kind of basis shifting. I really advise against that because the IRS is looking for it. And that's where people are trying to structure or move partnerships and business deals around where they can avoid some taxable hits. That's starting to get looked at just kind of like captive insurance, micro captive insurance, those type of things as well. It's the same thing as captive insurance. What I always like to tell people is it needs to pass the smell test.
Okay.
And forest, not the trees. Let's look back and see here. Does it smell right? Are we seeing everything? Because if I can defend it on the big level, I'll get into the details. But if I need to be able to have a leg to stand on high level before we start arguing details.
Okay. All right. Cool. I do want to shift
But
into some of those strategies as we're talking about stuff that does work, doesn't work. What are some of the maybe tax strategies that, you're perfectly comfortable? I say perfectly comfortable. You're comfortable given the caveats they're done correctly, right?
yes,
That maybe the average CPA isn't going to point out to their client. Um, and it could be for a variety of different reasons. Maybe they're not aware. Maybe they're less comfortable with it. Maybe
it doesn't feel
they're just
right.
less aggressive, right?
Yeah. Well, it's a rule
So
follower. It's they historically the things that haven't been or they've said as red
yeah,
flag. So like, ooh, we wouldn't be
they're
afraid.
preparing your taxes as opposed to helping you reduce your tax bill legally.
Correct. Yep. So I mean, home office. That's let's start with the easy one. Is if you're entrepreneur, have some sort of self employment income. Home office. Let's figure out what is
Yep.
used for business purposes, and then allocate that for maintenance of the house and everything else. Another thing is like, some CPAs are sticklers and saying, hey, we need to allocate internet and cell phone instead of just taking the whole thing. I take the other side and say, no, we don't. This is not the 1950s. We don't pay per minute. You have to
Yep.
have a cell phone. You're going to pay the rate what it is. So if we are running our business, irrelevant if 30-40% is personal, because I would have to have that full 100% bill even if I didn't
To
have
have
any
it at all.
personal and to have
Yep.
it at all. So those are easy, low, piddly things. We get up to the next level. We're talking about the Augusta Rule. It's
Explain
becoming
that.
Yeah, so the Augusta Rule is becoming more commonplace. But for those who don't know, that aren't nerds that read the stuff like we do every day, the Augusta Rule started in Augusta, Georgia, where the Masters is held. And so what had happened
I didn't
was,
know that.
yeah, that's
Yeah.
actually exactly where what happened. And so short-term rentals, Airbnb, VRBO, had been around for a while, but really started gaining traction, 2010 and on. So what had happened was is people were going to the tax court and saying, "Hey, we're renting out our personal residences for these short bits of time. How do we report this? Because we don't have it's not administratively doesn't make sense for us to have systems in place to capture like all of our expenses and
Yeah.
income and all of this for just short little sections." So tax court came back, and what had happened was is it was a some people that had rented their house in Augusta, Georgia for the Masters for 2 weeks. So they had rented that and they went to the tax court and said, we don't think it's fair to have to report all this income and then try to administratively come up with all of our expenses to offset that. And then tax court says you're not in the business of that. So as long as it's minimal, meaning
Yep.
2 weeks or under is what they said, 14 days, then you don't have to report that anywhere on your tax return. So we get to because their theory was is that over the course of 52 weeks, your expenses of that 50 weeks is going to eat up any of the income that you have for that 2 weeks that you rented out. it's such a small fraction that they're like, let's just
Yep.
make this a gimme for people. So now we know that if you, I, or anybody else rents our Airbnbs our house or VRBOs our house for 2 weeks or less, we don't have to report it anywhere on the tax return. If we get audited and they see, hey, you've got this, whatever that is, whether it's $4,000 or $20,000, as long as we can tangibly show that was income directly for this, we can write that off. So here's the fun part is what's the difference between renting to, Joe Blow or renting to an entity or a company, another taxpayer? So what now has happened, IRS hates it, taxpayers love it, is we can rent our house to our business if we have a entity as a business up to 2 weeks and be able to take that as a deduction. So there is very it's it's loose right now on how we do that. We
Yep.
do know the few caveats is that it has to be fair market. Everything in tax law we need to it's valuation and fair market.
It's fair
We can
value.
be,
Yep.
and that's the gray area is because Augusta, Georgia. If you've ever been to Augusta, Georgia, it's not anything to write home about. It's kind of the armpit of South Carolina and Georgia. I say that jokingly. I'm in Charleston, South Carolina, the gem of the South, Southern charm. Augusta's inland. Not much going on there except for the Masters. But so that's the thing. I say this because if you were to rent a house in Augusta, Georgia in August, you'd pay $200 a night. If you were to rent that same house during Masters Week, it's going to be
Yep.
$2,000 a night. Same as if the Super Bowl, when the Super Bowl came to North Texas and was at Cowboy Stadium, Arlington houses were
Yep.
renting crazy amounts of money. So we have to have that and we have to be able to make the argument of valuation. So what I usually tell most people is like, look up on Airbnb in your neighborhood. How much is that? Let's be reasonable. Let's have this. And then in practice, I'm seeing across the board in the industry, some people are doing a 1099 from the business to themselves personally as rent, putting on the Schedule E, backing out the expense, and trying to do that as a way of showing method. I don't like that because it brings it too much to the forefront of the IRS. Because if I'm scanning returns, seeing who's going to get audited, and I see that happening, then I know exactly. So it's kind of like putting bait on a
So
hook.
they're marking the Augusta Rule payments to themselves as rent, as opposed to just like a business. Is that what you're saying? Or
It
you're
is a
saying that
rent
they're
expense. And so as for the business, on the business side of the
that's right?
equation, it's a rent expense.
Okay.
It's
Yes.
income to me personally. So the way that I would kind of put that in my books is rent expense to the business and then the
On the
money
business
out
books, it
on the
shows as
business
a
books. And
business
then
expense.
for Jared or Gabe, this would be money in as a rent expense. And so it's a or a rental income. I mean, I'm sorry,
Okay.
rental income, and which rental income shows up on a Schedule E as a like rental
Yes.
property. And then a lot of CPAs are backing that out as a other expense,
Okay.
saying Augusta Rule or whatever else. I don't like that because it brings too much attention to it. I just put it as a rent expense, leave it there.
So
If we ever get
it's
questioned,
is it income that doesn't have to be reported, or is it income
correct,
that is not taxable? Because that's technically two different statements, right? So if you don't have to
correct.
report
And
it, what
that's
you're saying is
where,
why put it on the documentation?
well, and that's the thing is right now, that is where the arguments line inside the tax law community is you have a
Okay.
lot of the fear-based people that are saying, no, we have to report this as it's reportable but not taxable. Then you have the other side of the equation saying, no, the tax court cases and everything else is saying you don't even have to report it. So, yet again, we
Yeah.
take out the business aspect and think Airbnb, and most people would never even put that on there. So, you take out the business side of it and the kind of self dealing side of it, and it's not, you wouldn't put it on your tax return. So, why would I put it on my tax return just because I have a business? And I would be doing that as a fear
Because my business was
response.
the renter and not some random person was the renter.
I would be doing that as a fear response, not as a strategy
Okay.
response.
Okay. All right, cool. So
So
we've got the Augusta Rule, we've got the
yep.
home office.
Yeah,
Uh,
paying your
give me a
kids.
couple more. Keep going.
Oh, let's dive into paying your kids. Paying your
Let's get dangerous.
Oh, I love this. I love paying my kids. I do it. I use my situation as an example because I'd argue it, and I may be putting my neck in a guillotine here. And I'm sure that some IRS person's gonna be like, "Oh man, we're going after Gabe," but I'll defend my findings. Uh, so paying your kids is something that has been done forever, but it's becoming a lot more popular. You're seeing it on TikTok, you're seeing it on all the social
You're
medias.
seeing the gurus talk about it is when it starts to get dangerous for the average person, right?
Absolutely, it's too good to be true. But what we have to do, okay, so paying your kids, few different ways of doing this. And the reason why we'd pay our kids is you have a high net wealth individual. So somebody that's in that 30 plus bracket. So they're making, good money. Well, we want to shift some income or some of that down to a lower bracket or no bracket at all.
Yep.
So by getting it to the kids who don't make much or anything, then we're able to say that money is taxed at a lower level.
Yeah. And that
That
could go into like, retirement accounts or used for you can't use that from my understanding, correct me. You can't use that for their normal living expenses because that's like
I
the
disagree. There's been some people come out, but I do think that you can. I don't like it. I think putting into retirement accounts solidifies it more. But yet again, so I put it this way: is if you have a child model, so 5 year
yep.
old that makes 15, $20,000 through a modeling contract. I'm the parent or guardian. That money's going straight into the bank account to use for daycare expenses, groceries, everything else. Yet again, why are we treating money in from one source differently than in the
Okay.
other?
Okay.
Most people don't. A lot of people are like, "Ooh, they think it's too aggressive." So we want to see that going into a retirement account, a Roth, or something like that. And that is the most strategic. But yet again, what I always say is fortify the
Also
walls.
potentially the most beneficial for the child as opposed to the family as a whole, long
Yes.
term.
Yeah.
Yeah.
That's what a lot of people try to say. And I agree. I think if you have the resources to do that and liquidity is not a problem, do that because it one more block for me to say, hey, this is the kids' income, not the parents. We're not just
Yep.
shifting. So that's why they say do that. And you have a lot of strategists say that because they have seen during audits, people come back and say, hey, this is a BS maneuver that you're just shifting and we're going to break it apart. So that's the why. However, what we could do on the business side when we're saying pay the kids is we have to show economic benefit to the business. So the kids actually have to show some sort of benefit to the business for the business to pay them, and that's where people go awry. My friend on the inside of the IRS that we were catching up the other day, she was telling me she was in a fraud class, and it was a tax attorney that was paying their kids. And I'm like, oh man,
Uh-oh.
yeah. She was laughing. She's like, I had to check the name twice, and I was like, no, it wasn't me. She said though, on the facts on that case were they were flagrant. He had two minor children, and his records show that he paid them $15,000 a piece to clean up the house after having some clients over, and that's what their job was. You never pay a maid or a cleaning service $15,000 to
Yeah.
clean up after two client parties a year.
Yeah.
That's not that the economics don't work out.
Yeah. You'd
That's not reasonable.
so on that end of the spectrum, essentially his argument was an expense category, right?
Yes.
That's what that turned into, as opposed to what you had mentioned to me previously, personally, was like if your children are tied to the brand and income generation side of your business, there might be a wider avenue of what's acceptable.
Well, and that's where it's still an expense category, but that's where we get into
Well, it's an income generating expense, not a I don't know, cleaning up. It seems like a
operational
different
overhead.
category.
Yet
Yeah.
again, you're way too smart, Jared. Dumb this down for the slugs that are in the IRS. They're not thinking that high level. They're seeing an
Okay. Okay.
expense is an expense,
Yeah.
income is income. They're black and white. They're seeing two categories: money
I'm
in, money
sorry. I've
out.
been self-employed too long to.
You have no.
Yeah.
You're too high level there. So what a lot of the tax court cases and a lot of the history of paying the kids, it looks to one of the examples is a pizza shop. So we have a pizza shop that's owned by husband, wife, the kids underage working there. They're bussing tables, they're being the host, they're washing
Yep.
dishes, or these kind of things. they're keeping time logs, and we can say, hey, we would pay a hostess $12 an hour. So we're going to say that $12 an hour goes to them. And so at that point, we put them on
No
payroll.
nepotism premium on that?
That's where you could. They like that, but yet again,
Yeah, nah.
reasonable what you would.
Yeah.
So that makes sense. Like labor for that. We're not going to have a 5-year-old bussing tables. But that's where we get into the fun tax plays and the creative side of marketing, branding,
Yep.
modeling. And this is where yet again
Value
it
creation.
was my Instagram model client. I learned a lot from her. She helped expand my thought process with a lot of things with her situations, but we basically, she had her kids on a lot of stuff, put them on payroll, and it was like, gosh, they're just not doing much. But then I'm like, she came to me and I was like, okay, can we justify this as reasonable? And she's like, every day of the week. She was like, I've hired models for everything else I do and all these different photo shoots I have. And she's like, I'm paying thousands of dollars a day for these models to come out and be on these fashion things. And she was like, I got tired of hiring people. So I'm putting my kids to save me money. And she was like, if it wasn't my kid, I would have to pay this
Yep.
fee. And I'm like, cool, we have market rate. I have tangible proof of why, business nexus and a business purpose. So paying our kids absolutely made sense. So we take that to the next level now. People like you and I that are entrepreneurs running our business, we use our kids in our marketing, our brand. I am a family guy. I am not a
Yep.
suit and tie CPA, attorney, lawyer guy. I'm not going to be the smartest guy in the room in a boardroom. I'm somebody that is going to be in the backyard hanging out with you. I like to think I'm smart and hardworking, but I'm not. I don't want to wear the suit and tie. I want to be around my
Yep.
kids. I want to be around my family. So my brand, my marketing, my videos that I do on TikTok and Instagram and everything else feature my little tax credits, my kids.
Yep.
And so I talk about them, I feature them, they're there, they're part of my story. And that story is what generates income. And I could easily march across 12 plus clients in front of the IRS and say, this person knows me and connected with me because of the brand that I cultivate.
Yep.
So, thus, those kids have value and have economic substance. So, when I then take the expense against their modeling contract that I draft up, and I have a modeling contract in place signed by the business and their guardian,
Hmm.
I now have created this kind of chain of events and explaining instead of slapping it down and just saying I'm taking it.
Yep. Okay.
So, it's that's where when we talk about paying your kids is don't be sloppy. Just like everything else, it's keep records, have the reason, give me something to connect the dots. Because if I have that, I can walk into that audit or the appeals or tax court and run circles around them explaining the why and the nexus. And they could sit here all day long and say, I don't like it, I don't like it, I don't like it, I don't believe you. But I guarantee you, if I have enough of that thought out process, I'll win,
Yep.
or at least I'll negotiate it down. And we're going to stay out of that kind of danger zone.
Okay. All right. Why don't you touch on everyone's favorite thing that you hear in the movies? You hear people talk about their CPAs. Do you know where I'm getting to? The
Mm-mm.
one that gets brought up for all the rich people. It's end of the year, and I need a tax write off. What do I do?
Are you talking about buying a car?
Yeah, buying a car.
It is. Oh, I hate this. It's okay. Buying a car is fine. A lot of people do it, but this is like the short-sighted CPA answer to everything is go out and buy stuff, spend money at the end of the year. And I'm like, that is the worst strategy possible because
Spend $100,000 to save 20.
that's
Uh,
you're tying up capital. Let's invest. Let's invest. Do not spend money. Like
yeah.
everybody comes to me and is like, oh my gosh, we're gonna owe all these taxes. What should we do? And I'm like, let's invest. How much dry powder and liquidity do you have? Let's put our assets to something that has a
Yep.
tax advantage and that will generate income. Let's not just go buy something. Buying a car, it makes sense. Okay, so we know our company's growing. We have a delivery service company and we know that we have a fleet of vans. I need another Mercedes Sprinter in
Yep.
Q1 of next year. Then it makes sense to, hey, let's time this in Q4 of the year before to get that
Yeah.
tax. That makes sense. What doesn't make sense is to go spend, buy,
Go
the
buy a
Suburban,
Cybertruck
a
because
Cybertruck, yeah, for the family and try to write this off. Not only that, but we're creating a tax trap. So what so many people don't understand is that we're writing that off, but it's not, it's going to come back and haunt you. All we're doing is kicking the can, and we're being
yep.
sloppy and lazy with our tax plan. It's not strong or high level tax planning just to go spend money at the end of the year. Because when we take that depreciation, we write off that truck. So a Cybertruck, we buy it, well, used to be over 100, now 75,000.
Yeah, yeah, yeah.
Sorry, Elon. So $75,000 right now. We buy that Cybertruck, we write it off. So we drop that through the roof, and now it's zero basis. We keep it for a year or two. We then turn around and trade it in for something different. We're generating phantom income and
Yeah. You're
depreciation recapture.
recapturing the depreciation.
So people now are getting pissed off at me because they're like, oh, hey, I want to go get a new car. I'm tired of the Cybertruck 2 years down the road. And we go to do their taxes. They haven't called me. They haven't told me anything. They throw me some new vehicle purchase down on my desk. And I'm like, oh, well, you have a trade in value of $50,000 for that Cybertruck. I got to pick all that up as income. And they're like, what? Why? And I'm like, because we had no basis on it. So we created a tax trap that most people don't think about. So I don't like that strategy.
Yep.
It can make sense
If
if,
you already need the vehicle, it makes sense to
or
buy it late Q4 rather than early Q1, right?
that, and then also just like a 1031 exchange, it's very similar to the thought process that goes through buying real estate and knowing we're going to 1031 exchange into different properties and grow our portfolio. If you know what you're doing, that's cool, but let's not be sloppy or lazy. So
Yep.
buying that truck may make sense. Writing off that car, I'm cool with, but let's be ahead of this. A tax plan and a tax strategy is more like an orchid than a dandelion. It's not going to grow in concrete. You got to put a little
I
an ice
love it.
cube in it every
Yeah.
week, and you got to talk to your people. You got to think about this. If you're the type of person that tax and accounting stresses you out and you want to touch it 1 year and then just shove it to the side, those aren't the strategies you need.
Okay.
But if you're somebody that's a little bit more intertwined with your tax
Yep.
situation, then we can have some whys.
Okay.
Um, Investing in alternative investing is really, I, yet again, this is a great podcast because I know a lot of our listeners are accredited investors, and
Yep.
that's where the real tax planning and strategy lies.
Yeah, and
Is
you just mentioned if you're trying to offset income, invest it rather than buy a
yes,
truck, and you got to do all your own due diligence. I have a guide people can download in the link how to use ChatGPT to help with due diligence, but
absolutely.
um like oil and gas is a investment that offers some really good tax
Huge.
advantages if it's still a good investment.
Well, there's a lot of people. You've heard the saying. John Heyer uses it. Keith Blackboard uses it. I've heard several others too.
Yep.
Don't let the tax tail wag the business dog,
Yep.
and that is where us tax nerds sometimes will advise people on like, oh my gosh, this makes so much sense for tax without taking a step back and seeing the
Yeah.
forest and the wealth situation. I try to coach my clients and a lot of my high net wealth people of saying, I hold one seat at the boardroom of your financial situation. We need the wealth advisor, we need the attorney, we need the insurance guy, we need all these other seats filled
Yep.
because you need a full team that's seeing it from different angles.
Yep.
And that's
Eh,
where, yeah, oil and gas. I love oil and gas as long as it's
As long as it's a good
such,
investment,
yeah,
right? Yeah,
yeah,
it's a good deal.
absolutely. Well, I grew up in West Texas, so I love oil gas. I grew up
Yeah.
around it. Pump jacks were yeah, I'm a Texas Tech kid, and trust me, that smell of oil every year, we all smiled a little bit. But yes, no, oil and gas is a really good one, but you're right. There could be some bad operators.
Yeah.
Oil can fluctuate the barrel cost. We can see a
Yeah.
lot of things happen there. Uh, but knowing the other things that we have with some other opportunities and trying to figure out where your tax problem is and how we're going to do that. So
Yeah.
short-term rentals is another.
Well, and that's where now that we're on these topics, we most of the tax strategies we discussed are primarily used by self-employed individuals, small business
Correct.
owners. So, right now, I want to ask you to tell us some of the best strategies for the high income earners that are not self-employed, specifically attorneys and doctors probably are kind of those the two biggest categories. Some highly paid engineers. What are
Absolutely.
strategies that people can do to reduce their earned
W-2.
income, right?
Yeah.
So let's hop into that because you've mentioned two of them. We got oil and gas as a potential investment. You've got a way to do Airbnbs that could potentially be there. But what else? What else? What other tools are in the toolbox for W-2 employees?
Typically, we need to find some way to have an active loss. And so you have, like you mentioned, you have that W-2 earner is active. So in tax theory, you have three buckets. You have the active income,
Yep.
investment income, and passive income. So each of a loss or income in each of those buckets will have different rules and they don't necessarily affect each other. So if we have a big capital loss, that capital loss is not going to offset our $500,000 W 2. If we
Yeah.
have passive income from a multifamily syndication, um, and no other income in that passive, that's not going to offset that W 2. So we need to find a way to tap into that active income bucket. And that's where oil and gas, because of Congress and intangible drilling costs and general partner rules, we have that
Yep.
ability to make it an active loss.
Yep.
Short term rental loophole is another one. Then we look at other things, such as deferral of income. So that's where we get to try to, you know, maxing out retirement accounts, doing something to have a side hustle that's generating income will open that up. And that's where I always say self-employed individuals, we really need something to help us open that door. If we don't have the opportunity or doing that, then we look at maybe some charity plays. There are some great charity plays
Okay.
out there. So timing is one of them. But then also there are some opportunities for accredited investors to have some other charity plays where we're able to contribute a certain amount and have multiples of what we contribute as a charitable deduction due to some tacking rules, and structuring. It's some really interesting things that I have some partners that I refer out to. It's I don't touch them, but I refer them and I vetted them and I've been
Yep.
working with them for a little while, so I like them. But there are some interesting plays out there that can help with that. We also want to always keep mindful of when we do generate business losses. We know now under the new tax bill, we have to be careful of how much business losses we do generate because we're capped. $600,000 of business losses is where it gets capped. So if we
Oh
have,
darn. Yeah.
I know, well, I mean, if
I
somebody's
know. I'm joking. A lot of people, that's like wow. But then you talk about the amount of losses that some really high net worth individuals are able to take, and that's they could hit that.
Well, not even just high net wealth. I mean, think about like I've got a friend and client up right now up in the Northeast who's been doing well, making good money on a W-2, but he was one of the first people in and helped this business grow, a startup. And now he's about to have this like $5 million boom,
Oof.
windfall in this year. So
Yep.
he's somebody that's done really well, but this year he's got this huge tax problem, and the way it is, it's going to all flow through as active income. And so that's the thing, it's all because he didn't have equity in the company and it's all a bonus type thing. It's
Okay. So it's
that's
not even
he
long-term capital gains.
No,
It's
it wasn't
okay.
ESOPs or stock options. It's all structuring as like a profits interest and a bonus. So yet again, really great guy, smart, helped this company grow, but because the owners never gave him stock or equity, it's coming through as active income.
Mm.
So he's now frantic coming to me like, I'm going to lose my shirt. I thought I was having this great windfall, but now I'm going to owe all this. So that's where, yet again, the 600,000 comes into play because it's like, okay, he's going to sit on this big pile of cash, but yet again, he's kind of frustrated because he was like, man, my expectations were to have so much set aside to where I can put this in retirement for my family, take care of my kids and all that. But he's seen all the high tax states taking a huge chunk because of this windfall in 1 year. IRS taking a huge chunk because of a windfall in 1 year. And this is what people don't understand with the problem with our tax code is everybody's like, tax the rich, tax the rich. And I'm like, it a tax return is a snapshot. Somebody wins the lottery, wins $1 million on the lottery, but has been making $50,000 a year up until that point. You take this huge swath and they don't have much to live on
Yeah.
after that. And that's the problem is the tax system in America and the way that the media portrays it. But that's where the $600,000 loss limit rules, business loss limit rules can kick in. And it's just like, man, it can be a little bit of a bummer, but hey, it's better than nothing. So we
Yeah.
have to strategize with that. So we look at different things, and then we also have to factor in alternative minimum tax. So every situation's different. It's kind of like dropping a bucket of Legos and saying build something. I need to understand what's going on. I had another client one time in San Francisco, and it was funny because we were talking. I'm like, there's an obvious answer here. I'm like, a very obvious answer. You're trying to grow your wealth, you're trying to grow your portfolio and high W-2 earner. And I'm like, oil and gas investing. Like, and he was like, Gabe, I can't do it. He's like, I will literally get shunned if anybody finds out I spent $1 on oil and gas in my circles, I will absolutely be ostracized and like
Oh,
shunned from my social circles. And I'm like, fair enough. I'm like, that sucks.
man.
But
That
I know, I know.
Yeah, that's crazy. I did want to say, if anyone is interested in learning about that, go listen to the interview I had with Steve Blackwell.
Oh, love
Super
Steve.
informative. He really dove into kind of the differences in the IDC and
Yeah,
drilling versus mineral rights. So that's a good one. All right, Gabe, we've been here a while.
we have.
Let's
Sorry.
yeah, let's start. Start wrapping it up, but I've still got a couple questions for you.
Yes.
With a lot of the other guests, I've asked, what are some of the red flags when it comes to alternative investing?
Mhm.
I want to twist that with you. What are some of the red flags that are thrown up on a tax return that can increase the chance of an audit? That, maybe it's not that you shouldn't do them. Some of them could be absolute red flags.
Yes.
Others are, is it reaching a certain income threshold that there's kind of a difference? I know previously I've heard that the IRS signaled if you made under 400 grand that your risk for audit was incredibly low. I'll say it that way. I've heard some people mention that the home office deduction can be an uptick. Not that it was a red flag in any way, because it's a common thing, but it could be an uptick to look at. But what are some red flags when people are doing their tax returns? If they're not working with you, maybe they're trying to push their
Yeah.
CPA to do something a little different. They've heard a guru. They're trying to do something. What are the red flags that you say, hey, be extra careful if this is what you're doing, or totally stay away from this?
Absolutely. Well, easy one, conservation easements. Um, still some going out there, but stay away from them. Captive insurance is another one. There are specialty groups out there right now with the
Okay.
IRS that are looking for those, and we don't want to put a welcome sign on our tax return for them to look around and poke around other things. So even though conservation easements done properly and right, I don't like them because it just adds way too much of a red flag in front of the bull.
Okay.
Um, home office, the materiality is so low. Augusta Rule materiality is pretty low. Right now, the IRS is really going after they're turning their eye to materiality instead of details because since they're the lower staff for the next few years, that's where the bigger numbers. So what's happening and what we're seeing, and I've seen a lot of audits recently come across my desk, is bonus depreciation, special depreciation, higher depreciation expenses. So
Okay.
that is not necessarily a red flag, but one thing that I have seen that helps that is if you go cost seg a property, tagging attaching that cost segregation report to the tax return, because as returns are getting reviewed for audit, it goes through two sets of human eyes. So it gets graded by an algorithm whenever you submit your return. Highest scoring gets put in a stack. Then somebody will thumb through it, see, hey, this is potential audit risk. So if I'm seeing a couple hundred grand of depreciation expense that's
Yep.
way out of proportion, with no other explanation, it's like, ooh, hey, they probably made a mistake. But if I'm seeing that cost seg report, reduces that audit risk. So
Yes.
high depreciation, high losses, K1s that are active instead of passive, yet again, have explanation because if I'm having a loss, any losses that we're materially getting down our income, that's going to be where the IRS is looking right now and saying, hey, can we go in and figure out, did they make a mistake? Should this be, is this wrong? So if we're taking those, just make sure to have your documentation and getting proper advice. The
Okay.
other stuff, I'm not too worried about because each tax return's a painting and a portrait. It
Yep.
needs to make sense. Every tax preparer is an artist. They are going to make it look a certain way. Some people are slapping on a character, stick figures, and other people are trying to copy the Mona Lisa. You just need to know what artist is best for your situation. If you're doing a bathroom remodel, you can do it yourself. You can hire somebody at
Yep.
Home Depot, or you can get a licensed and bonded contractor. All three are viable options. Make sure that you're just kind of picking the lane and knowing what you're doing and assessing your risk because at the end of the day, the tax preparer walks away, you're on the hook.
Yep. Okay, so maybe the last question. I always end up asking
Please?
like one more after,
Ah,
but
you're good.
at what point do you suggest people stop doing their own taxes? And you might
Yeah,
say, I mean, here's the deal. The average person has some level of ability to do most things, right?
absolutely.
But I have clients that'll come to me, hey, who do you do? Do you do your own? And I was like, I don't. I haven't done mine in a long time. Actually, never done my own because my dad was a CPA, but he eventually kicked me to the curb because he had kind of stopped doing it full time, and he was doing like 10 total tax returns every year, and I was the third most complicated.
Yep.
So he's like, Jared, go find somebody else. I'm winding down. But at what level do you say, hey, you really should think really hard about doing your own versus hiring a professional, right? If all you got is a single W 2, not a big deal. But
Absolutely.
yeah, what does that look
I
like for you?
I typically tell people that if you have anything outside of just the data entry, so taking tax forms and putting them on there.
Mhm.
So if you're doing a Schedule A with a lot of expenses, so if you have a high W-2 and you're looking
And
at
Schedule
stock
A's
options,
cover.
Schedule A's are your itemized deductions. So that's
Okay.
your
Yep.
your
Itemize.
taxes, your medical expenses, your charitable givings. There is some interpretation there. If it's pretty straightforward, TurboTax it, do it yourself. Like I tell people, and not only that, but just like I said with the bathroom remodel, most high earning people don't want to be stressed out with the few hours it takes to sit down and understand this or doing it right. So we have to
Yep.
make sure that they want to hire somebody, and those simple returns don't cost terribly much for a good competent professional. But I would say at the level, if you're feeling stressed, that's a time to bring in somebody. If you aren't feeling stressed, but you have some complication or a side hustle or a business or trying to do
Yep.
anything, get somebody in there because you don't want to have a water leak that causes black mold. And just like on a tax return, one misinterpretation, we put something there and it can cause issues down the road that you never knew were happening. And that's what you're hiring with a tax
Yeah.
professional is somebody to kind of just verified. They may technically not be doing anything different than you, but they've been around long enough to know when there's a problem, and that's what they're
Yeah.
going to catch. And that's what it's trying to.
They know it's accurate versus you hoping it's accurate.
There you go. And that's
Yeah.
where I always tell people, it's like it's the old anecdote of the engineer that paid or charged $10,000 to go over to the machine, knocked on it once, and it worked fine. And he told the company, you paid me $10 to be here and 900 or 9,990
Yep.
to know where to knock.
To know where, yeah, to know how to fix it. Yeah.
Yep.
Okay. All right, Gabe, tell us what you are like. Tell us about what you're
Yeah,
currently doing, right? How to get a hold of you, and maybe who your ideal client is, not from a you
absolutely.
perspective, but from a them perspective. Like, who can you help the most
Absolutely.
um, in what you're currently doing?
Oh, yep. Thank you very much. So for me, my business, my company is called Palmettos and Prickly Pears Tax Filing
Love it.
Advisory. I went with a brand because growing up in West Texas, living in Charleston, I wanted to be different than the suits. So what I do is public accounting. So I help people, business owners, and just anybody that has tax needs. So not only business but individual filing. We do
Yep.
tax filings. So everything, just tax preparation services at a flat rate model. We lead with relationship and kind of um, wanting to know the people and work with them instead of just a transactional type of
Sure.
relationship. And then advising, consulting, tax planning. So
Which
helping.
that's the big highlighted line between what you're offering and what a lot of CPAs do, right?
Absolutely, and I like to make sure that we have real understood and communicated expectations with what that looks like. So my
Yep.
engagements range from person to person. I have several clients that are on retainers month to month that have a lot of moving parts with their investings or buying, the mergers and acquisitions, and coming into some of these conversations and explaining, hey, be wary or mindful of this. So I have some retainer requirements, and then we also do engagements on project base. So we can do model out where you're at and come up with ideas, and then basically open our war chest and Rolodex and really try to put you in front of people to help reduce or mitigate your situation. So yeah, here to help people. I service clients throughout the country and world. Run a
Yep.
virtual shop. It's just more efficient, and we're able to do it. So we utilize a lot of technology to make things efficient. And I have some great staff and resources and people in my corner. So
Yep.
uh, ideal client is really, I find, kind of somebody that can see the value and is in tune with their situation. It's really hard to help people that aren't wanting to help themselves.
Sure.
I say I'm the personal trainer at the gym. I've got the tools and I know the routine, but I need you to show up and do the work.
Okay.
Same
Yep.
type of thing. I need people to not just hand it off because so much is there for interpretation. We can get your tax situation and your financial world really sorted out, but it's not a one-way street. So somebody that's in their 30s all the way up to pre-retirement or maybe post-retirement with investments and activity, small business owners, and then just high net wealth, or maybe not even high net wealth, but people that are accredited
Yeah.
investors,
High income earners.
high income earners. Accredited investor I usually find because at the rates that I have, it's nice to have people that see the value in what I offer.
Yep. Yep.
So, yeah, that's and just like I said, I have a no jerk policy.
Yeah.
So
Yeah. That's a good
people
one.
that we're a small shop, it's a boutique firm. I want this to be reiterating a relationship driven business. So I
Yep.
want to work. I want to be excited when I see my clients pinging me on email or calling my cell phone, and I want the same. I don't want my clients to feel like they're scheduling with a proctologist when it has to come to talking about their taxes and accounting.
Yeah, no, that's great. And we met at Pi, right? That's where we
Yeah.
met couple years back. So
Yeah.
I met Gabe at Pi. There's a lot of great people there. I'm going to plug the passive investor event again. Going to be a link for that. But that's coming up in October. So that's going to be a good one. And so Gabe, tell our listeners how to get a hold of you.
Yeah. So palmettostax.com is, and that's plural. Palmettos is a palm tree for those around the country that didn't know, but palmettostax.com.
Okay, all right.
Yep. Yep. So, and then also Palmetto's Tax on all the socials.
Okay,
Uh,
we'll get
and
some
Gabe,
links.
yeah, some links and all that. And then I'll be at Pi. I'll actually have a table there as well. So anybody that wants to
Okay.
come and hang out. But yes, find me on the socials and looking forward to being able to help some people and just spread the love of tax and tax savings.
That's right. I know we got a little nerdy today, but I appreciate it. We had some good content. So Gabe, thanks for being here.
Absolutely. Jared, thank you very much. It was an absolute honor and looking forward to some more content that you're putting out. You're doing a great job.
Awesome. Thanks, man. Okay, so that was a long conversation, but I gotta say, we covered a lot of good and useful ground. And I personally work with Gabe. I previously worked with what I would consider a standard CPA firm, and I got to tell you, there's a big difference with working with someone like Gabe. So if you do not feel like you are getting the tax advice and the tax strategy that you are hoping for or wanting from your current tax advisor, whether it's a CPA or an attorney, give Gabe a shout. Reach out to him in his contact information below. And I do not think he will disappoint. Now, secondly, if you are looking for additional wealth optimization strategies, you are looking for investment ideas, you are looking for man, just an all encompassing wealth building model, you need to check out the passive investor event that is this October. So take a look at that. That is going to be, it could be transformational for your wealth journey. And I do not think anyone who attends is going to regret being there. The tickets are astronomically cheap for the value that you'll be getting. And you're going to get to see a lot of trusted advisors and trusted individuals like those you have heard and listened to on this show. So thanks for watching. If you haven't already done it, subscribe wherever you listen and look forward to the next conversation.